Santa Monica's housing market all through 2022 has been extremely hot. But is it starting to tail off and cool down in quarter three? We're about to get into the numbers right now, and you cannot afford to miss this. If you're thinking about buying, selling, or investing in Santa Monica, this is the video for you. Let's get on into it.
Package be booming, yeah, we got it. She picking and choosing in love with the moment, yeah, we got it. They cannot do what we doing, you see how we moving, we got it.
Hello guys, Eric Haas here with Sotheby's Realty International here on the west side of Los Angeles out of Santa Monica. And what a crazy housing market we've been experiencing throughout 2022, and it only gets more interesting as it starts to maybe cool off in Santa Monica. We're about to find out. Before we jump into it, make sure if you haven't already, check out Mar Vista and Venice. We've already done that in the playlist West Side Quarter 3 series, so check that out if you are interested in those neighborhoods as well to see what's going on. But also, if you could leave a like, comment, and subscribe. We're on our way to 1,000 subscribers. We're looking to crush that before the end of the year, so help us get there because we're all about delivering value and dissecting these numbers so you as a buyer, seller, or investor have the utmost information so you can make the best decision possible to execute and win at the end of the day in any market we face. So without further ado, let's get into Santa Monica numbers and see exactly what kind of market we're looking at in 2022 and 2023. Part 1 of 5, we are taking a look at the number of active listings, pending listings, and sold listings here in Santa Monica, quarter 2 versus quarter 3, to see exactly what kind of market we have going on for buyers, sellers, and investors, and whether or not the changes in the numbers are placating more towards a hot seller's market continuing for Santa Monica or starting to cool off to be a buyer's market. We're going to take a look at the number of active listings right now, and we see that there is a 14% increase from quarter 2 to quarter 3, 59 active listings for quarter 2, 67 being the number of active listings for quarter 3. It is definitely showing that higher interest rates are having an impact on buyers as they sit back to see exactly how this market is going to react to the higher interest rates, because higher interest means that buyers don't have that purchasing power, so they're going to wait and see how much down in value things are going to go, and we're going to see exactly what that is as well in this video with the numbers as it's starting to show exactly where this market is headed for Santa Monica. Now, our pending listings has definitely dropped off a cliff. It was at 23 pending listings for quarter 2. It has dropped 35% to now 15. Again, inflation, recession, depression are all having an impact on your pocket, and buyers are definitely waiting as a result, as well as because of that higher interest rate. And they are saying that the Fed is going to raise it another 6 times by the end of 2023. Now, if that happens, we'll see. But hey, it's something to be aware of. Now, we look at the number of sold listings, though, and it plays a different story because the number of sold listings is actually up 15% from quarter 2 being at 54 to 62 homes selling in quarter 3. Now, remember, the changes started happening at the end of quarter 3. So a lot of these homes were already locked in with a wonderful interest rate that a lot of us right now cannot experience, whether we're looking to buy a home or refinance for that matter. So look at this number again as we report on quarter 4 numbers, because I think we're going to have a rude awakening and a major change up to that. But let's move right along. Part 2 of 5. Yes, the market is definitely changing, and that's why we have this new edition here as we take a look at Santa Monica and the number of price reductions for quarter 3, how much of the inventory took a price reduction, and what it's like if you sold your home in the first 30 days versus selling your home after the first 30 days. So taking a look at quarter 3, price reductions 22. This was not even a conversation we were having in quarter 2 for Santa Monica. This is now a conversation we're having again because of higher interest rates, inflation, recession, depression, higher gas prices. People just don't have the money in their pocket like they used to. So things are changing, and as a result, 33% of the inventory for quarter 3 Santa Monica had taken at least one price reduction. That is insane. Before we were talking about how many homes are taking, a multiple offer and going over the asking price. Now it's how much of the inventory is taking a price reduction. In the matter of a month, it radically has changed. Now, if we look at home selling, you still have a great chance if you price your home correctly in Santa Monica. If selling in the first 30 days, you will likely get 100% plus of the original asking price. And if you're lucky, 104% in this current stat. But if you are selling after those 30 days, mind you, beware, you are probably going to endure a price reduction and probably sell way under that 100% and 94% if you are lucky, because this market is not getting any better. Part 3 of 5, we are looking at the median active, the median pending, and the median sold price to see what the adjustments have been and seeing what kind of market we are moving towards. As I've told you before already, part 1 has definitely shown that it's turning more so towards a buyer's market. So is part 2. Let's see, in fact, if part 3 is definitely supporting that as well. And as you can see, median active price unfortunately has risen, and I think this is just some frustration on sellers' parts. They still want the price that they want, but during the shifting market, you have to be very smart about pricing from day one. And unfortunately, it has jumped from 4.1 million in quarter 2, still a hot seller's market. It has increased 2% to 4.2 million. Not a huge jump, but every dollar counts in this changing market that seems to be cooling off and more advantageous for buyers. Now, as we look at the median pending price, things definitely changed. It went from 3.8 million in quarter 2, again, a more of a hot seller's market, 18% drop to 3.1 million for the pending median price. And that just goes to show you that this is actually what's coming. Mind you, these are homes that are still 30 to 45 days out, because that is what the normal run of an escrow is. The truth of the matter is, here as we look at that median sold price versus the median pending price, and there's a major discrepancy, but an increase in the median sold price from quarter 2, 3.5 million, increase of 6% to 3.7 million. But don't think that that's going to last very long. Again, that is playing off of a hot seller's market from quarter 2 into half of quarter 3, and it is looking like it is going to cool down as that median pending price is showing. We are at 3.1 million. That's a $600,000 difference between the median sold price for quarter 3. Part 4 of 5, guys, we are taking a look at the sold volume, the average days on market, and the sold price versus the list price. And right off the bat, you see that in the sold volume, it still looks like it's a hot seller's market. We had a 200 million sold volume for quarter 2, and it jumped 34% to 268 million being the sold volume for quarter 3. Again, average days on market makes it look like it's still a hot seller's market here in Santa Monica. Average days on market for quarter 2, 38. That's dropping 24% to 29 being the average days on market for quarter 3. But here it goes, my friends. If it was still a hot seller's market like we've been experiencing, this 101% would not be dropping 3% to 98% for quarter 3. And while these numbers are showing that it looks like it's a hot seller's market, remember that majority of quarter 3 was still a hot seller's market. It wasn't until the last 2 weeks of quarter 3 did the interest rates started increasing and increasing dramatically. That's why we're at, north of 7 now and possibly going to 8. But this sold price versus list price at 98%, this is not showing that the market is still as hot as it once was, and things are starting to cool off here in Santa Monica. Part 5, we take a look at the number of homes selling above asking, at asking, and below asking, and it's going to get really crystal clear right here. Buyers, sellers, and investors, listen up. This is the part you want to be paying attention to, because it is showing you exactly what kind of market is on the horizon and what we're going to be looking at for 2023 as well. And the number of homes selling above the asking price for quarter 2 was at 37. It has dropped 14% to 32. That 37 actually accounted for 69% of the homes selling above the asking price in quarter 2. That has dropped 17% to 52% of all the homes selling in quarter 3 sold above the asking price. So things are starting to cool off. And as we see further with the sold at asking, you'd like to see that number trickle up even more, even in a cooled off market, but it is not the case, my friends. That is dropping 33% from 3 in quarter 2 to now 2 in quarter 3. That 3 accounted for 6% of all the homes selling in quarter 2 sold at asking, where that number 2 is accounting for 3% of all the homes selling in quarter 3 sold at asking, a 3% drop. Now we look at that sold below asking price, and it is definitely getting real, as we had 14 selling below the asking price in quarter 2, 28 in quarter 3 selling below the asking price. That is a 100% increase, and that 14 only accounted for 25% of the homes selling under the asking price in quarter 2, which was definitely a lot less than that 69%, which had 37 homes selling above the asking price. But We look at that sold below, and that 28 is accounting now for 45% of the homes selling below the asking price in quarter three versus 52% selling above the asking price. That number is getting very tight and very close, and we may see it changing to where we see sold below asking price is getting the upper hand, putting buyers in a great opportunity to take advantage of homes that are not only priced incorrectly, but are taking price reductions and will probably accept an asking price below a price reduction as well. So buyers, you are going to find yourself in the driver's seat. And I get it, interest rates are still crazy and it doesn't seem like things are getting better. Check out a 5-year to 7-year fix. That can buy you some time in refinance in that interim. That's exactly what I did, and we went from a 4.5% interest rate to 2.9. I get it, the market was completely different, but that is a way that you can still get in this market. Sellers, the best way for you to take advantage of this market is to price your home correctly from day numero uno. If you don't do that, you're going to be one of those homes that took a major price reduction, if not one, two, and then selling your home below that. That is not the position you want to be in, especially when we just came from a hot seller's market. I get it, there's expectations, but chill the pride down, because you've got to sell your home. You got to get the best money. You got to get the right price and set the right price. So on that note, my friends, have a great one. Hope you found tremendous value. Please, if you haven't liked, subscribe, or comment already, please do so. The comments I'm checking out always. Feel free to leave a comment that has a suggestion for a topic for me to cover. More than happy to do so. And without further ado, have a blessed one, and I'll see you when we cover Brentwood, California next. And that's the 90049.